Hello my dear friends, hope you all are doing really well. This is CA Supreet Agrawal, your faculty for ACCA AAA Law and AAA subjects. So my dear friends, today we are going to solve questions of chapter number 3, which is Code of Ethics for Professional Accountants. In the last class, we have already solved the questions of chapter number 1 and 2, and in this class, we are going to solve the questions of chapter number 3. Okay, so this is Code of Ethics for Professional Accountants. Like we have discussed yesterday only, the chapter is from page number 11 to page number 19. Okay, so let's quickly go over there and see what all questions are there, and let's try to solve it. Okay, the format is going to be similar what we have solved yesterday or what we have followed yesterday, which is that we are going to read the question, but we are also going to discuss about the tips and tricks that we need to follow while reading the question. That is, do we need to read the case study first, or do we need to go through the requirements first, or what all points should be there in our answers, and how is it reference to our syllabus? Everything we are going to discuss while solving these questions. Okay, so let's first agree how many questions are there. So first question is of Duran Company, okay, from ACCA Study Hub. Then we have this question is done. Then we have second question, Carter and Company, okay, source ACCA Study Hub. Then we have okay, so for this chapter we have two questions. Okay, these are two selected questions which are very good. Okay, now what is important for us is that for this particular chapter we are going to solve both the questions. Okay, why do I say that? Because this is one of those chapters which is definitely going to be asked in the examination. So in your AAA syllabus, there are certain chapters which are very important for your examination. Number 1 is money laundering, number 2 is code of ethics, number 3 is planning, okay, number 4 is completion and review, number 5 is reporting. These are certain chapters which are very important and definitely asked in the examination. So we are going to solve all questions. Okay, but for planning stage, of course, we might not be able to solve all questions because there are so many questions. Okay, so let's agree for this one first. So we are going to solve for two questions here. Okay, and the format in which we are going to solve is, we are going to read the case study, we are going to discuss about what is the requirement, we are going to discuss that, okay, and then I am going to give you the time to solve it. Once you solve it, then I am going to move forward with the answer. Okay, so number 1, it is 1st July 2025. Okay, why this is important? Because year ending might be different for all questions. So in your paper there are going to be majorly 3 case studies. Okay, there could be different year ends. You cannot assume that March would be the year end, or December would be the year end, or September would be the year end. It could be different for all questions. So that is why you need to understand, and where you are standing helps you decide whether it is talking about subsequent events, whether it is talking about going concern issues and all. Okay, so it is 1st July 2025. You are a manager. Okay, you are not a partner, you are a manager in Depeshe and Company, a firm of chartered certified accountants. Okay, you have a specific responsibility for undertaking annual reviews of existing clients and advising whether an engagement can be properly continued. Okay, undertaking annual reviews of existing clients and advising whether an engagement can be properly continued. That is, you are responsible for the acceptance and continuance procedure, and inside that also majorly continuance procedure, whether a client should continue in the upcoming year or not. Now, the following matters arose in connection with the audit of Duran Company. Okay, a listed company. So Duran is a listed company. Should you note it? Yes. The audit team included a manager, 2 supervisors, 2 qualified seniors and 6 trainees. Okay, so let's write it also. 1 manager, 2 supervisor, 2 qualified seniors and 6 trainees. Okay, so total 11 people. The final audit, and 1 partner would also be there. Okay, the final audit, which lasted approximately 5 weeks, was very time pressured and the team worked late into the night towards the end of the audit. Okay, Duran Company's staff were very supportive throughout and paid for evening meals that were brought in so that the audit team could work with minimum disruption. Okay, so they have paid for the food. Is it somewhat fine, or will it result in some threat? No, that is fine. No, that is on humanitarian grounds that people provide food if you are working in their office. Okay, now Duran Company's chief finance officer Frankie Sharkey was so impressed with the commitment of the audit staff that he asked that Depeshe pay them all a bonus through an increase in the audit fee. So the firm would increase the audit fee of this particular time, and that money will go on to pay off the bonuses of these people. Now this is somewhat which gives threat. Okay, in April 2025, that is few months back, that is why the dates are important, Depeshe paid all the members of the team below manager status a bonus amounting to a week's salary. So they have already been paid the bonus. Who? Below manager. So manager has not been paid, but below manager has been paid a week's salary as bonus. Okay. The bonus was processed through Depesh's payroll in the same way as overtime payments and recharged to Duran company as part of the audit expenses. That is, it has been paid and the same amount has been charged. Now that should not be the case ideally, okay, because even if you are paying the overtime, that is your call, no, that you are paying. So that is why it should not be charged back to the client. Okay. Now, one of the points initially drafted for possible inclusion in the report to the company's audit committee concerned the illegal dumping of drums containing used machine oil on nearby wasteland. Notes of discussion between the audit manager and Frankie show that it is the company's unwritten policy to disregard the local environmental regulations and risk incurring fines, which are only small as it would be costly to use the nearest licensed disposal unit. The matter is not referred to in the final report. Okay, I think if you feel that you can solve this question, you should always try. Even if you feel that sometimes it is very hard, sometimes it is very easy, you should always take a pen and paper. You should note down all the important pointers. For example, up to point 1 and 2 it was pretty simple, but even if you feel that it is point 3 which is difficult, you should always try to write down the answers. Second instruction would be that if sometime, just in case you feel that some part of the question might be missing, you can go back to the ACCA study hub. You can check it for the questions which are taken from ACCA study hub. Okay. Now, required comment on the ethical and other professional issues raised by the above matters. Okay, and discuss the appropriateness of available safeguards and advise whether depositor could continue as the auditor. Now, third point is a very big issue, right? Third point is a very big issue because this company has an unwritten policy to disregard the local environmental regulations. Now, this gives a big risk to the audit firm as well, because this company might go down any day, right? So this is very important. Now I have highlighted all the important pointers from this particular point. Okay, we have discussed it also. Now you should take 10 minutes and you should solve this particular question. Once you solve it, then we will be going for the reading of the answer. Okay, that's how we should do it. So take 10 to 15 minutes. Okay, I'm pausing the recording. Okay, take 10 to 15 minutes, then we will discuss the major pointers, then we will restart the recording and we'll read the answer. Okay, thank you. Okay, so I hope by now you have read the question, you have solved it, you have drafted your expected answer also. Now if you have any questions, first of all, please ask on the chat box. Yes, I can read your chats. If you have any questions, please let me know. I can read your chats. Yes, let's first discuss about your questions, then we will move forward. Yes, any questions? Okay, this was a pretty simple question to be honest, right? But it is asked in the examination also, and similar question could be asked from the ethics chapter. So that is why I have taken this question in the question bank also. Okay, so let's read the suggested answer and let's see if there is anything to understand. Okay, so number 1 is ethical and professional issues. What is the question? Comment on the ethical and professional issues that we have already discussed. So we can read it directly. The review on an ongoing basis of existing clients is a safeguard. For example, Duran is a listed company which should not be retained if recurring fees from it exceed 15% of depreciated gross practice income. This we have already discussed, right? For listed company, for non-listed, for non-PI it's 30%. So over a 2-year period, a pre-issuance audit review would be required. Safeguard as Duran is a publicly traded company and therefore a public interest entity. So what would be required? A pre-issuance or hot review would be required. That is, before issuing the audit report, there should be a review. In making a decision to retain a client, depositor must consider its independence and ability to serve Duran properly and integrity of Duran's management. So independence and ability and integrity of management. Independence and ability of audit team and firm, whereas integrity of management. So there are certain pointers that needs consideration here. What is the marks of this particular question? 10 marks. Okay, so is it important that you write 5 points and explain it? No. How many points are there in the question? That depends on that. Okay, so hospitality, even if there are 2 points, you have to explain in detail. Even if there are 5 points, you have to explain in somewhat less detail than 2 points, but yes, in detail. If there are 10 points, then you can list down the points. Okay, now depreciation's objectivity may be threatened or appear to be threatened by acceptance of goods, services or hospitality from Duran unless the value of any benefit is clearly insignificant, or there is one more word which is used in your text, which is trivial, right? The audit staff have already accepted the hospitality. Their objectivity should not have been impaired provided that the meals were appropriate to the normal courtesies of social life. See, we have discussed, no, it is on humanitarian grounds. Okay, can you use this word humanitarian grounds? Yes. Okay, so appropriate. Meals were appropriate to the normal courtesies of social life. That is why they were okay. However, undue hospitality is likely to be regarded as a corrupt practice, which could be indicative of fraudulent activities having taken place. As the staff needed to work late to meet the deadlines, an alternative to Duran buying in the refreshment would have been for the audit team to make their own arrangement and for Duran to have been recharged the expense. That is, it could have been reimbursed rather than incurred. That is, it could have been reimbursed rather than incurred. But I'll be honest with you, my dear friends, what happens is a lot of times we are at a client place which is far away from the city, right? The factory places could be there, the offices could be there, the colleges, premises, all of that could be far from the city, where food might not be available, especially at odd hours. So therefore, when the client is more inclined towards arranging the food there because of the non-availability, it could work as a normal thing also. I have also faced similar situations a lot of times where I was sitting at a factory, say at 8 p.m, 9 p.m, when the whole area is shut down, nothing is available. So the client asked me only that can we make some arrangements for the food or what. So since we opened our app, there was nothing available, so we politely asked them that yes, please make the arrangement, although allow us to pay. Okay, that is something that we have done. Okay, now however, undue hospitality is likely to be regarded as a corrupt practice that we have discussed. Okay, now financial reward. Let's discuss about the financial reward. Now this is clearly wrong, right? Financial rewards, because even if the bonus was paid, it was charged back to one particular client, as if that team is hired for that one particular client only, right? Similarly, the particular person is asking that you give them the reward and charge it to us. That is also wrong. So financial reward. Professional accountants in public practice should be and appear to be free of any interest which might be regarded, whatever its actual effect, as incompatible with integrity, objectivity and independence. The bonus was not accepted in respect of the audit manager's involvement. Therefore, there is no obvious threat to his objectivity because it was not paid to manager, it was paid to below manager, right? The bonus may be perceived to be a reward or bribe for having not detected or reported on a matter, and acceptance of it may cast aspersions on the audit team's integrity. That is, audit team's integrity might be questionable. Make questionable in simple terms. Okay, you could have used this word. The bonus has been processed by debitor in such a way as to account for tax, social security contributions, etc., and recovered through the recharge of expenses associated with the audit. It represents an increase in the audit fee, and the gross cost to Duran should be included in the amount disclosed in the note to financial statements as auditor's remuneration. That is, in the financial statements also, this amount should be regarded as auditor's remuneration. The bonus should be excluded from the fee when considering the recurring element in relation to the percentage level of gross practice fee income. That is, even if this amount is charged back, then it should not be made part of the auditor's remuneration. It should be depicted, it should be presented separately from the recurring fees. Okay. Has the situation arisen in respect of previous Duran audits? Was the subject of such bonuses mentioned before the audit fieldwork was completed? If the audit team had any expectation that a bonus might be awarded to them, it is likely that there will be a perception that their objectivity could have been impaired. So whether it was previously agreed or not, that is very important before accepting. Okay. This point is not very important for you to write, but other points are very important. Now, has the situation created an expectation that such bonuses could be a feature of this audit? Acceptance of the bonuses may have created problems for debitor's practice management, as it may be more difficult to allocate audit staff to other assignments if they have a preference for the Duran audit. See, what happens is, if the staff knows that whosoever goes to Duran gets the bonus, that too from the client, and it is sure, then everybody would like to work for Duran only, right? And it would be difficult for the audit team or for the audit partner to relocate the staff to other audit lines, which might create a threat. So that is why it is mentioned over here. It is a very special point that should be mentioned. Okay, that the bonus was not accepted at the manager level suggests that this was considered to be a threat to objectivity. The same approach should have been taken for all members of the audit team. The bonus should not have been paid. That is, since manager has not accepted it or it has not been paid to the manager, there is no particular line which tells us that manager has not accepted it. It is only said in the question that it is paid to below manager. So since it is not paid to the manager, it could be understood that the audit partner, audit team was also aware that it could be a threat. Okay, now clients and auditor integrity. Frankie Sharkey's apparent disregard for environmental legislation should have been taken into account when making a risk assessment of Duran's control environment. It may cast doubt on his integrity. The audit of Duran should have been carried out with due regard to laws and regulations, consideration of laws and regulations in an audit of financial statements, and matters to be communicated to those charged with governance, ISA 260 communication with those charged with governance. Now this is very, very important. Okay, that audit of Duran should have been carried out with due regard to following, which is laws and regulations as per ISA 250 and matters to be communicated to those charged with governance, ISA 260. Okay, since there is no point of internal control, that is why we have not mentioned ISA 265. Otherwise, if there was some failure of internal control related to it, then we could have also integrated ISA 265, which is communicating deficiencies in internal control to those charged with governance. Now, for example, if the illegal dumping became apparent during the audit but was not known at the planning stage, consideration should have been given to the frequency of the illegal act. What is the frequency? Okay, if it is a new information, how long it has been going on? Okay, how long it has been going on, what measures, if any, had been taken, what measures taken. Okay, now to conceal it from the auditors, to hide it, that is the potential financial consequences like fine, penalties, etc. Whether the potential consequence requires disclosure. Sometimes there are certain laws which says that if you do not follow us, you have to mention it in your financial statements. Whether risk assessments made at the planning stage need to be revised. Okay, risk assessments revised. The validity of management expectation representations, that is sometimes what happens is if management has this unwritten policy, then you will have doubt over the integrity of the management also, and if you have doubt over the integrity of the management, then by default the management representation letter that they have given you might not be that much trustworthy. So that becomes a big problem here. Now, matters to be communicated to those charged with governance, that is the audit committee, include the potential effect on the financial statements of any significant risk and exposures such as pending litigation that are required to be disclosed in the financial statements, other matters warranting the attention of TCWG such as questions regarding management integrity. It is of potential concern that the matters have not been included in the financial report unless the engagement partner knows, for example, that the matter has already been brought to the audit committee's attention. Okay. Does the draft report constitute an audit working paper? If it is retained on file, it should clearly explain why it was not incorporated into the final report. If there is no apparent justification for its exclusion, the integrity of audit manager and engagement partner may be questioned. So these two are very, very important, but let's read it. It is of potential concern that the matters have not been included in the final report unless the engagement partner knows that the matter has already been brought to the audit committee's attention. Okay. Does the draft report constitute an audit working paper? If it is retained on file, it should clearly explain why it is not incorporated into the final report. That is, if it was made aware to the audit engagement partner or audit engagement partner and manager knew about it, then why they have not incorporated it into the report? That is very, very important. Now, available safeguards. Okay, this is also important. Safeguards are actions individually or in combination taken by the professional accountant that effectively eliminate threats to compliance with the fundamental principles or reduce them to an acceptable level. Now, my dear friends, please try to understand this line. Okay, this is not a line which you can draft according to yourself. Why? Safeguards are first of all defined as actions, not processes, not structures, actions. Individually or in combination, like we say for materiality, right? Taken by the professional accountant, not auditor. Not auditor. That effectively eliminate threats. Eliminate threats. You can also write eliminate or reduce. Just writing eliminate is not correct here. Why so? Even if it is the ACCA study of answer only, I would suggest you do not need to write eliminate, because sometimes the safeguards do not eliminate, they just reduce, right? With the fundamental principle, or reduce them. See here, or reduce them, it is written, right? That is very important. Okay, so you can directly write it here only, because I have seen a lot of students missing this part. Now, available safeguards include declining to accept offers of ongoing hospitality. That is, if they try to order anything else for you going forward, you can decline it, as this is likely to be considered to be excessive. Informing TCWG of Duran of all offers of hospitality. Okay, declining to accept offers informing TCWG, an independent review of the basis on which the engagement partner decided that it was appropriate to accept the bonus on behalf of the staff. Independent review of the basis on which engagement partner decided that it was appropriate to accept the bonus on behalf of the staff. Senior staff should not be assigned to the audit. Okay. Having an appropriate reviewer. Why not senior staff? Now, a lot of students questions here. Why senior staff should not be appointed? In fact, it should be senior staff should be appointed so that they do not get the benefit of bonus, or they do not get manipulated because of the bonus. I'll tell you why. See, as senior staff has more authority, so we cannot afford that they are manipulated and they are still working. So that is why senior staff should not be applied here. Now, having an appropriate reviewer, that is very important. Pre-issuance review also. The engagement partners on time cannot exceed 7 years, right? As per regulations, because it is a PI, no? Okay. Now, advise whether the audit of Duran company should continue. Now, this is clearly very important. Why so? Because it is asking for a very specific answer to a question which might have a lot of factors. So, the Duran company should be retained only if a partner of Depeshe unconnected with Duran independently reviews the safeguards available and considers them to be appropriate. But partner of Depeshe, that is partner of same firm, yes, that is partner of same firm, yes, that works. But unconnected with Duran, that is unconnected to client. Now that person will not be manipulated by these bonuses or anything, so that is why they will be the right person to review it. Alternatively, if the safeguards are available and not adequate, the patient should withdraw the audit. Now see, for this question, always give both answers. Diplomatic answer, that is conditional answers. If this is the condition, this should be the answer. If this is the condition, this should be the answer. That is how you need to solve this question. With this, we have solved this question. Okay. This was a very good question. Okay, we have approximately invested 40-45 minutes to this question, okay, including your writing time, but this is a very good question. Okay, now what we'll do is we'll come to another question, but I think you deserve a little break because we have solved this question for a lot of time, for a big time. Now let's take a 10 minutes break, then we'll come back and we will solve this question. now let's start with the second question. So my dear friends, second question is on Carter and Company. Okay, so let's read it fully. Carter and Company, and this is a very good question. Okay, so Carter and Company taken from ACCA study hub only. Now it is 1st July 2025 again. Okay, 1st July 2025 again. Okay, you are a manager in the audit department of Carter and Company. So this is the audit firm. Okay, and you are a manager. You are dealing with several ethical and professional matters raised at recent management meetings that relate to audit clients of your firm. So you have had several meetings with the management of your clients, and you have noted down certain pointers that we are going to study here. Okay, so Fernwood Company has a year ending 31st July 2025. Okay, and you are sitting on 1st July. That is 1 month. 1 month later. Okay, now during this year the company established a pension plan for its employees. This year end the company will be recognizing for the first time a pension deficit on the statement of financial position in accordance with IAS 19 employee benefits that you have studied in FR and SBR syllabus, right? The finance director of Fernwood Company has contacted the audit engagement partner asking if your firm can provide a valuation service in respect of the amount recognized. Valuation service. Now here you must remember from the study text that we have done from the concept lectures that valuation service is allowed having appropriate safeguards in place, right? So it should be driven by standards and so many safeguards are there, right? Now the finance director of Hall Company, okay, this was for Fernwood Company, now Hall Company, has requested that a certain audit senior, Kia Nelson, be assigned to the audit team. This senior has not previously been assigned to the audit of Hall Company. On further investigation, it transpired that Kia Nelson is the sister of Hall Company's financial controller. Okay, so it's the sister. So there would be familiarity threat. Okay, that is important. Now, so here there could be a matter of self-review threat, whereas here there could be a matter of familiarity threat. Okay, now third one, Collier Company has until recently kept important documents such as title deeds and insurance certificates in a safe at its head office. Okay, they have kept it at their head office. Okay, works. However, following a number of thefts from the head office, the directors have asked if the documents could be held securely at Carter and Company's premises. So auditors will have the documents, the confidential documents of the client. The partners of Carter and Company are considering offering a custodial service to all clients. Custodial service to all clients. Can this be provided? Yes, but you will have to check that whether it is allowed or not. So self-interest threat. Okay. Some of whom may want to deposit tangible assets such as paintings purchased as investments for safekeeping. The fee for this service would depend on the value of the item deposited as well as the length of the safekeeping arrangement, which is as per the business norms only, right? The more valuable the material is, the more valuable would be the safe custody fees also. So this will give rise to majorly self-interest threat, right? That is very, very important here. Okay, so these are very, very important. Now Fernwood, Hall Company, Collier Company and Gates Company. Okay, so you are dealing with several ethical and professional matters. Now what you need to do, you need to evaluate it. For Fern Company 7 marks. Okay, for Hall Company 7 marks, for Collier Company 7 marks. I think by chance we have missed this one here. So there is one error. I'll also note it down. Okay, I'll also note it down. This is page number 15. Okay, but we have to evaluate it. But majorly we have covered 21 marks. Okay, for Gates Company we can go to the ACCA study hub and see. Okay, not an issue. So Gates Company, now we have to draft the answer for this one. Okay, allow me 2 minutes. I'll open the ACCA study hub. We'll read for the Gates Company also right now. Hi, due to a technical glitch, I am not able to log into the ACCA study hub right now. No worries, we can solve this Gates part in the next class. Not an issue over here. I think there has been some printing error. Okay, so not an issue. We can solve rest 3. So you can take 15 minutes time. Please draft the answer for Fernwood Company, Hall Company and Collier Company, and what we are going to do is we are going to then discuss about it. Okay, so Fernwood Company, Hall Company and Collier Company. Okay, so take 15 minutes. I'm pausing the recording here. We'll resume after 15 minutes. Whatever questions you have, you can ask in the meantime. I'm here only. Okay, so I hope you have drafted your answer. Just in case if you have any queries, please feel free to let me know. I can read your chats now. Yes, please let me know if there are any queries. Yes. Okay. Okay, so just to tell you, this Gates company question was about the referral fees. Okay, so there is a referral fees arrangement that somebody could refer. Okay, and the audit client could come to the audit firm, they can get their service done. So what are the safeguards regarding that? That was the question. Okay. Yes. Okay. Okay, so now let's read the answer. See, a valuation service is an example of non-assurance service that we are aware. The key issue is that if an audit firm provides a valuation service for an item which will be included in the financial statements, a self-review threat exists. Yes, we have identified this one only, self-review threat. The self-review threat exists because the audit firm will be auditing a balance on which they have themselves placed a valuation. But if it is based on the standards, then the issue or the threat reduces a little bit. This will reduce the firm's objectivity in relation to the audit due to bias, whether conscious or unconscious, towards the valuation work carried out by the firm. That is, even if they have the best judgments available, consciously or unconsciously they will be biased. That is true. The significance of the risk depends on the level of materiality of the item in the financial statements. That is, how material is the item in the financial statement. If it's a 1 lakh crore balance sheet and the item of the valuation is say 1 crore or 10 crore, then it is not material, right? It will not impact the opinion. But if it is say 100 crores, 1000 crores, so it creates a lot of trouble. According to ISBA's Code of Ethics for Professional Accountants, if the valuation service involves the valuation of matters material to the financial statements and the valuation involves a significant degree of subjectivity, the self-review threat created could not be reduced to an acceptable level. What is the condition? If the valuation service involves the valuation of matters material to the financial statements and the valuation involves a significant degree of subjectivity, the self-review threat could not be reduced. Why I have enabled this auto save option? So that we do not lose out on the data that we write here. Okay, if this were the case, the audit firm should not provide the valuation service. That is, if it is not driven by standards, if it is on subjective judgment, then the valuation service should be declined. If this were the case, the audit firm should not provide the valuation service. Alternatively, if the valuation service was provided, the firm should resign from providing the audit service. Okay. Carter and Company must assess the degree of risk in valuing Fernwood's pension liability. If the amount is immaterial to the financial statements, as this is first year, so it is expected also that it might not be very material, so does not involve a significant degree of subjectivity. The valuation can be provided as long as safeguards are in place. For example, using separate personnel for the valuation service and the audit service, that could be one safeguard, good safeguard, right? Having an appropriate reviewer, that is also one safeguard. And you will see that this one appropriate reviewer will always appear or will appear at a lot of places wherever there is a safeguard required. Now the valuation of the pension balance mentioned recognized. See, what happens is, why this is always a safeguard appropriate reviewer, because generally the problem is of independence only. Once you are independent, okay, independence of mind, independence of appearance, then the matter is sorted. And if there is an appropriate reviewer, in most of the cases there would be an evidence that it has been reviewed by an independent personnel, so now there is no such risk. Okay, now if the valuation of the pension balance recognized is likely to involve many judgments and assumptions, and so is likely to be a subjective exercise, it is therefore most likely that Carter and Company will assess the situation as creating a significant self-review threat, which safeguards cannot reduce to an acceptable level, in which case the valuation service should not be provided as well as carrying out the audit. If Carter and Company were to provide the valuation service, the firm should carefully consider whether it possesses sufficient skills and expertise to perform the valuation. This is a specialist area and the firm would have to ensure that it could perform the work competently. So whether it has sufficient skills and expertise, that is also one area. Now Hall and Company, okay, allocation of staff. So allocation of staff to an audit team should be the decision of the audit firm and should not be influenced by the wishes of the client. This should be made clear to the finance director. First of all, staff should be allocated to an audit team based on the needs of the audit, the expertise required, the seniority required. The team should comprise staff with a mix of skills, experience and technical knowledge as appropriate to the size and complexity of the audit, as well as logistical issues such as location and deadlines. Introducing an audit senior with no previous experience of the client may lead to an ineffective leadership of the team and could jeopardize the quality of the audit. Jeopardize as in compromise with, right? Compromise with. So you have to mention this line, okay? Which is more important line here? The team should comprise staff with a mix of skills, experience and technical knowledge as appropriate to the size and complexity of the audit, as well as logistical issues such as location and deadlines. Okay. Now on the other hand, working on a new audit client will provide Kia with more experience and broaden her knowledge and expertise also. A further issue is that Kia is a relative of the finance controller of Hall. A family or personal relationship between a member of the audit team and an officer or employee of the audit client can create threats to objectivity. The threat that arise are as follows. Number one is familiarity, that we have noted down. Again, intimidation could also be there, self-interest could also be there. Why intimidation? Because they can use their relation to intimidate this particular senior. Also, this particular senior has their interest in that particular company, so there would be a self-interest there, but majorly it is familiarity. Kia may fail to approach the audit with professional skepticism. Intimidation, the finance controller may be able to exert influence on Kia, and self-interest, Kia may be unwilling to challenge the finance controller about accounting matters for fear of causing problems for her relative, right? Now my dear friends, what if in this particular case, if it was not a finance controller's relative but maybe a financial accountant's relative, or maybe the purchase manager's relative or purchase executive relative? So it depends on what position the relative holds in the company. If they have significant influence over the financial statements or not. For example, if it is a purchase executive's relative, then will it have much impact on the financial statements? No. Then audit member could continue the audit. But this is finance controller we are talking about, next person to CFO in most of the companies, right? So that is why it is creating a threat. The degree of threat depends on the level of seniority of the close family member, where they are in a position to exert direct and significant influence over the financial statements, then the threat is significant. In this case, Kia's relative is the finance controller, so is clearly in an influential position. Kia herself is also in a position of some influence over the audit, as she would take the position of audit senior, therefore responsible for the day-to-day supervision and the direction of the junior members of the audit team. The most appropriate course of action would be that Kia is not assigned to the audit of Hall, and the reasons for this should be explained to the client. Now, Collier company. Okay. So as of now, we have solved two cases. One is Hall company, another one was Fernwood company. Now let's come to the third one, Collier company. Okay. Usually documents such as title deeds, this is about the custodial service, right? This is about the custodial service. So usually documents such as title deeds or insurance certificates are held by the audit client or their legal advisors, but sometimes the service is provided by the accountant. The code states that before agreeing to providing custodial services, the audit firm must ensure that there is no legal restriction on holding assets. A self-interest threat could be created. So did we identify the correct threat? Yes. Self-interest threat could be created as the firm receives a financial benefit from the fee charged for the service. There could be a perception of a close relationship between the audit firm and the client. If one is holding documents on behalf of the other, both these situations could reduce the objectivity of the firm towards the clients. Appropriate safeguards to be used in the provision of a custodial service could include keeping the assets physically separate from the firm's assets. Yes, there could be a separate room, separate space, separate facilities. Keep orderly. So these are safeguards, right? And this is important here. And why I'm saying these safeguards are important, because you might not be able to guess these safeguards. Keep orderly documentation regarding the assets and be ready to account for them to the client when requested. That is, whenever it is asked from the client that how the custody has been taken place, you should be able to answer. Establishing strict controls over the physical access to the assets, that who can access, who can enjoy the physical access of the asset. So sometimes it should not happen that the painting was given to the audit firm and now that painting is lying over, or it is fixed at the partner's cabin. It should not happen, right? So what should happen, that it should be separately identified as from the firm's asset, and there should be a proper accounting for it as well. Now, confidentiality is also a key issue. The firm must ensure that documentation is only ever given to the client who has entrusted it to the firm. The reasons for this should be explained to the client. In addition, Carter & Company should be vigilant in respect of money laundering regulations. It should not happen that clients are using this professional accountant firm for the purpose of money laundering by hiding their assets. The intangible asset could be purchased using the proceeds of crime, and as such, the firm in custody of such assets would be deemed to be involved with money laundering. The firm would have to be careful to ascertain the true origin of the assets in its custody. A further issue is whether Carter and Company has sufficient security to offer such a service. Employment of extra security methods such as alarm systems, CCTVs, security personnel could be costly and might outweigh the revenue to be derived from offering the service. In order to maximize the revenue from this source of income, Carter and Company could be tempted to concentrate on holding high value assets, as these would attract the highest fees. Okay, so this is important. In order to maximize the revenue from this source of income, Carter and Company could be tempted to concentrate on holding high value assets. They can have a policy that we are not going to handle all the assets, maybe not documents. We are only going to handle the assets or take custody of the assets which are of high value, so that our fees could also increase. This fees, as in not the audit fees, the custody fees. This would compound the security issues discussed above, especially the cost of extra insurance. If there were ever a problem such as documents held in custody being lost or damaged or assets being stolen, Carter and Company would face major reputational risk. This risk, along with the extra cost discussed above, may outweigh the relatively small revenue stream that the custodial services would provide. Now, Gates Company. Okay, this is about the referral fees. The question was missing due to some error. I'll check it and we'll correct it also. But Gates Company, okay, this was about the referral fees. You can also see it from the ACCA study hub. So referral fees are not prohibited by the code. Okay, it is not prohibited. However, a self-interest threat. This is the threat that can arise as the audit firm gains a financial benefit for each audit client referred to Gates, which can reduce objectivity. The referrals and payments to Carter and Company can continue provided that safeguards are put in place. Safeguards could include disclosing to the audit clients that a referral fee arrangement exists and the details of the arrangement. So you should disclose it to the client. Okay. Receiving confirmation from the audit client that they are aware of the referral arrangement. Okay. Now, obtaining confirmation from all employees of Carter and Company that they have no interest in Gates. Okay, that is also important. And Carter and Company may also wish to consider the quality of the training provided by Gates. Any problems with the training provided could cause damage to the reputation of Carter and Company. Several audit clients have requested that Carter and Company provide technical training on financial reporting and tax issues. This is not a service that the firm wishes to provide, and it has referred the audit clients to a training firm, Gates Company, which is paying a referral fee to Carter and Company. Okay, now I understood what is the issue. Okay, the issue is this was the question that should have been posted here, but by printing mistake or maybe the copy paste error, it has been the alignment error, it has been pasted here. Okay, so this is the question and this was the answer what we have studied just now. Okay, so I hope this is clear. What are the safeguards? Disclosed to the audit clients, receiving confirmation from the audit clients, and obtaining confirmation from all the employees of Carter and Company. This is nothing but just the referral fee arrangement. Okay, so with this we have completed this chapter, and now we can go for next chapter, which is chapter number 4 in the next class. So what I'm going to do is I'm going to offer the concept lectures for chapter number 4 and 5, and then we will meet in the next class to solve questions from chapter 4, 5 and 6. Okay, so thank you so much. Okay, I hope you understood these questions, and I would suggest you to solve more questions, okay, from ACCA study hub, from other reference materials that you could have. But what I want you to do is that you have to solve every question with this much patience only. You have to read the question word by word, you have to draft your answers, if possible draft the full answer and then compare your answer with the suggested answer, and wherever you feel that you are not comfortable with the suggested answer, or if you have any questions, please feel free to reach out to me. Okay, with this thought I close this session. All the very best. Say got it for audit.